Hello everyone, welcome to another webinar by Indiabulls Securities. I apologize for a little delay. There was some technical glitch, but it's been resolved now. I request everyone to just put a hi message in the chat box so that I know that I'm audible enough. I hope आप सब मुझे सुन सकते हैं. आज का वेबिनार काफ़ी एक्साइटिंग होने वाला है क्योंकि ये एक रीसेंट डेवलपमेंट के बारे में है जो कि काफ़ी इंटरेस्टिंग होगा. Just drop a hi message in the chat box so that I know I'm clearly audible. You can see people are joining over here. We'll wait for a few more minutes and then we can begin with the session. Hello, everyone. Yes, so I guess we can begin with the session. So hello everyone, a very good afternoon to everyone present over here. I'm Akanksha Kumawat and I welcome you all to another webinar by Indiabulls Securities. आज के इस सेशन में हम बात करेंगे एक बहुत ही इंपॉर्टेंट डेवलपमेंट के बारे में, न्यू जीएसटी रिफॉर्म, जो रिसेंटली जीएसटी काउंसिल की 56th मीटिंग में अनाउंस हुआ है और ये चेंजेस 22 सितंबर से अप्लाई होने वाले हैं. ये रिफॉर्म बिजनेसेस, कंज्यूमर्स और इन्वेस्टर्स सबके लिए एक बड़ा इम्पैक्ट हो सकता है. तो इसी टॉपिक को डिटेल में समझाने के लिए हमारे साथ आज जुड़े हैं मिस्टर अमेया देवुलकर. ही इज अ चार्टर्ड अकाउंटेंट एंड अ चार्टर्ड फाइनेंशियल एनालिस्ट with more than 8 years of experience. He has been a product specialist at HDFC Mutual Fund for more than 8 years now. So without wasting any more time, I hand it over to you, Mr. Ameya.
Thank you all. Good evening, everyone. Thanks for joining. Actually, the fact that we are doing a call on a specific government reform just about highlights the importance of that reform. Generally, would do calls on funds or market outlook, so on and so forth. But the fact that we are doing a call specifically on GST, I think more or less indicates the importance of this particular reform. I'll just share the screen. I think the screen is already shared. Just Akansha, please confirm if the screen is visible or the document is visible. Then we can take it forward from there. It's visible, right? Akansha, can you confirm if the PDF is visible? I think it should be visible now. So yeah, first and foremost, as you're aware, there was a major GST revamp a few days back, and although that revised GST Act is yet to come into effect, that comes into effect from 22nd of September, which is the first day of Navratri. The broad structure of what's going to happen is, I think, more or less clear now. So what has happened actually is over the past 7-8 years since GST actually was implemented, there have been multiple calls or demands for GST rates to be rationalized, for the GST Act to be made simpler for implementation, for execution. And I think the government has actually chosen the right time to do that in the current environment. So on the global front, the economy is facing some headwinds from the US-related trade dispute. So the need of the hour was to push domestic consumption to offset any risk on the global front. The government has chosen the perfect opportunity to do that, and they've done it at the right time with the festive season ahead. So what actually they have done is there were multiple rates previously, right? You had a 5% rate, a 12% rate, 18% rate, 28% rate. And on top of that, you had the compensation cess. So all of that put together meant that in certain product categories, the GST liability was somewhere to the tune of 50% on certain products. Now, in the revised structure, what has happened is they've done away with the 12% rate and the 28% rate. Only two rates remain. So only the 5% GST rate remains and the 18% GST rate remains. There is a third rate, which is actually a demerit rate. So a 40% GST will be charged on things like luxury cars or cigarette, tobacco products, so on and so forth. But that's barely 0.5 or 1% of the total products basket under the GST coverage. So bulk of your products will be taxed at 5% or 18%. So that's a major boost for household savings and household consumption. So that's exactly what the government has done ahead of the festive season. And which sector specifically will benefit is what I'll try to touch base on briefly, because that is a more relevant thing. Obviously, everyone knows that consumption is expected to benefit from this, but how and which segments will be impacted and to what extent they'll be impacted is what I'll try to touch base on during this particular presentation. So to begin with, the biggest beneficiary happens to be automobiles. Now, we would have already seen in newspapers, on websites, even some of you may have got WhatsApp prompts from your automobile companies saying that, okay, we are offering so and so discount on these variants. Now, why have they started sharing these messages or advertisements? Is because there is a massive change in terms of GST liability on that particular segment. So previously, your automobiles were taxed at 28% plus a compensation cess, which varied between 0 to 22%. Now that comes down to flat 18% without any cess implication for entry level cars. So that's a good reduction of at least 10% for your entry level cars and two wheelers. And on the higher end of the segment for SUVs, for higher end cars, the rate is 40%. Now, previously that rate was 28% plus a cess of around 15% or 22%. So, which meant that previously, including the cess, the GST liability on luxury cars was around 43 or 45 or 50%. Now that comes down to a flat rate of 40%. There is no cess or no surcharge in addition to that. So, which basically means that even for luxury cars, even for SUVs, the new rate of 40% is significantly lower than the previous rate of 45-50%, which was the case under the old regime. Electric vehicles is the big change, is the big thing which has gone unnoticed. There is no change on that front, but that's actually a positive, because there was some apprehension that uh, the government may actually end up increasing the GST rate on electric vehicles from 5% to 18%. So the fact that they haven't changed anything is a good thing for electric vehicles. Now, India actually is a very price sensitive market, right? So whenever automobile companies pitch cars here, the pricing point at which they actually sell the cars is very important. Now, today, if someone probably wanted to buy a 20 lakhs car, that car has actually come down to 18 lakhs in terms of the price post the GST rate cut. If the higher variant, one variant above that was selling at probably 24 lakh, that would have come down to 22 lakhs. Now, what happens is, because of the reduction in prices, someone who was probably planning to purchase a lower variant may actually end up going for a higher variant. When that actually obviously helps the consumer, because now he has to just pay some additional amount to go for the higher variant. But more importantly, it helps the companies as well, because the margins on higher variants on bigger cars is relatively higher as compared to margins on the lower end cars. So any upgrading from consumers obviously helps the uh, car companies to boost their margins. And India is actually a very price sensitive market, as I said. Unlike Western economies where 5-10% price difference here and there may not make a huge difference, in India, even if someone is purchasing a 30 lakhs car and there is a reduction of 2 lakh, 2.5 lakh, that actually plays some psychological impact on how that purchase is perceived by the consumer. So India actually, being a price sensitive market, this 10% reduction in GST rate is a huge change for the car companies for car demand, and that's something which we expect to see in terms of increased volumes in the upcoming quarters. The second segment happens to be the consumer durable segment. So with the festive season around the corner, you would see a lot of purchases or a lot of advertisements again for TVs, washing machines, air conditioners. Again, that segment sees a reduction of 10%. So from 28%, you have the new GST rate would be around 18%. This is actually a segment which was seeing weak volume. So this year, the summer period was relatively lower because you had pre-monsoon showers way earlier than expected, and that ultimately meant that the demand for air conditioners during its peak season was muted. Now, with this whole rate cut thing, there could be some relief for the manufacturers. There could be some uptick in demand, and other white goods like refrigerators, washing machines also could see some uptick in demand. So this is another segment which could see some boost in consumption. Then you come to consumer staples, so your daily products, packaged foods, personal care products, toothpaste, snacks, biscuits, so on and so forth. No, things which you actually don't pay a lot of attention to, but they actually add a lot to your monthly cost, monthly budget every single month. Now, these commodities or these products will also see a reduction in GST rate from 12% to 5% for your food items and 18% to 5% for your personal care products. Now, what will happen here is the price may not be slashed by the FMCG companies. What they may end up doing is, instead of selling a 100-gram product, they may end up packaging it as a 110 or 120-gram product, hypothetically. So they may not change the price per se, but they may increase the quantity. So that in a way, that still benefits the consumers. Your eventual outgo over a period of time will be lower than what would have happened pre-GST cuts. And there is also a possibility that people may move to a better brand of a soap or a better brand of a toothpaste, or uh, more premium variants of biscuits, because the affordability has improved because of the GST cut. So that's another important thing, especially relevant in rural or semi-urban markets, where generally the offtake of premium products is relatively lower. There you may start seeing a trend of premiumization because of this GST rate cut. Then there is a 10% reduction even on cement, but cement as a sector is not a sector where the demand is price elastic. So demand for cement may not change significantly because of slashing of GST rates, but it could still boost your individual house builders. So if I'm building a house on my own today, the cement cost, the cost of construction would come down by 5 to 7 percentage points, and I may actually end up preponing that house construction. Builders may not stand to benefit, or they may actually not take this too serious in a big way. But if you're looking at individual house builders in tier 2, tier 3 towns, there could be some boost to that segment. On the consumption side, you again have hotels. So hotels with tariffs less than 7,500 per day, they have reduced the GST rate from 12% to 5%. Only thing is, the previous 12% which was available with input tax credit. So they could set off the liability that they owed to the government against the GST that they paid to their service providers, the hotel companies. Now 5% will be without input tax credit. So in terms of reduction in GST rate, that's not exactly a 7% reduction. That's probably a 3 to 4 percentage points reduction, but that's still some reduction in tariff which you could see. And that's they've actually targeted the middle income segment. So they haven't gone for a 15,000 per day hotel when it comes to the GST rate cut, or they haven't restricted the tariffs to as low as 3,000 or 4,000. They have chosen the perfect spot wherein 7,500 is the daily tariff, below which, if there is any hotel with a daily tariff below that 7,500 mark, then they have reduced the GST rate for those segments. So that could probably encourage domestic tourism, and people may end up upgrading to better hotels as well within that price band, provided they're below that 7,500 daily tariff. Insurance, yes, 18% becomes exempt, but it's actually not as straightforward on the insurance side. So insurance, yesterday, you would have read a notification from the income tax department that the insurers, because now their output, which is the policy premiums, those would be exempt from taxes. The insurance companies cannot set off the GST that they have paid to their service providers, which means that they'll have a lot of input tax credit on their book, which they cannot claim or set off or take refund for, which is actually a negative. And in that sense, even with insurance GST coming down from 18% to zero, you may not actually see premiums of insurance policies coming down. If at all anything, there is a possibility that insurers may end up increasing the premium, because now the input tax, the tax which they have paid to the service providers, the insurance companies, they cannot set off against anything, and that is something they may try to pass on to the end consumers, which is the policyholder. So insurance, not a positive per se, even in spite of the reduction in the GST tax rate. Pharmaceuticals, medical drugs, this is something, there was always a demand for this particular segment to be made exempt from tax, or at least to have a lower tax liability, and they have done that in this particular announcement. So from a 5 to 12% GST rate, it has come down to zero, between a 0 and a 5% rate on the medical devices and life-saving drugs. Now, for most households where there are senior citizens, there is a significant spending on medicines, right? Now, when healthcare costs reduce, it doesn't just add to the savings, it also helps those households to probably make other discretionary spending on other things, especially during a festive season. So, in a way, this particular move is also aimed at improving the consumption at a holistic level. And apart from the sectors which I mentioned earlier, there are certain sectors which could be indirect beneficiaries. So, banking, NBFCs, not direct beneficiaries. There is no GST rate cut, which they are directly beneficiaries of. But you obviously have NBFCs lending to auto companies. You have NBFCs lending to white goods consumers. So there are, if you go to a Chroma shop or a Vijay Sale shop or any other white goods selling shop, you will always have some guy from an NBFC like a Bajaj Finance trying to sell you an interest-free loan to fund your purchase. Now, uh, the demand for those loans is again linked to the demand for the underlying product, which is a TV, refrigerators, mobile phones, so on and so forth. Mobile phones obviously is not part of that GST slash rate slashing, but your TVs, refrigerators, washing machines have been are expected to be beneficiaries of the rate cut. So automatically, an uptake in demand for those products will obviously feed into the demand for credit or loans from these banks or NBFCs. So that's where you could see even NBFCs benefiting or even banks benefiting to an extent. And two-wheeler loans or four-wheeler loans, again, those are expected to go up because people may be tempted to prepone their car purchases right now before the car companies again increase back the prices somewhere down the line. So there is a possibility that people may think that, okay, the car company is probably reducing the price today, but maybe a year down the line, they'll again reset it to the old price. So if I have an idea that, okay, I need to buy a car in another next 6 to 12 months, it's quite logical that I'll go for the car purchase today itself, because I'm getting those messages, I'm getting those advertisements from the car company saying that, okay, this variant before the tax cut was say priced at 15 lakhs. Now it will be priced at 14 lakhs or somewhere to that tune. I'm obviously going to be tempted to go for that 14 lakh purchase today instead of waiting for another year, because there is no guarantee that those price cuts may remain that way beyond a particular point in time. So a year down the line, the car companies can again reset the price to the old level. So it will end up pushing consumers or nudging consumers to make the purchases today itself rather than delay those purchases. So that's how auto companies will see an uptick in demand, and auto companies witnessing an increase in demand is again an indirect uh, tailwind or a positive for auto ancillaries or auto component manufacturers. Now, auto component manufacturers include your tire manufacturers, your battery manufacturers. Now, the biggest consumer for those companies that is not you and me. It happens to be those car manufacturers like Tata Motors, Eicher Motors, Maruti Suzuki. All the car manufacturers, they happen to be the biggest consumer for these auto ancillary companies. Now, any uptick in demand for those companies automatically feeds into and results in an uptick in demand for the auto components, which helps with auto ancillaries. Again, as I said, auto ancillaries in that sense will become an indirect beneficiary from this particular reform, which we are referring to. What will be the potential outcome of this particular reform? Because ultimately, what we are concerned with is numbers, right? What is the number, or what is the amount of savings that could be driven by this GST rate cut? Now, as per expectation, as per estimates, this GST rationalization thing could result in 2 trillion rupees of household savings, which is roughly 2,000 billion rupees of household savings. I'll come to that aspect later as to how the number is arrived at. But broadly, you're looking at a savings of 2,000 billion rupees, which is 0.6% of GDP. And if you're looking at, generally, if you're looking at a growth of 7% GDP per year on a real basis, a 0.6% of GDP increase is a significant uptake in that sense. So, any headwinds that we may face from US tariff related issues, that can be more or less offset by this particular consumption boost by way of GST cut. And most importantly, this is not the only reform on the consumption side. If you have seen over the last 7-8 months, firstly, you had the budget making reducing the income tax outgo at the lower end of the slab rates. That I think resulted in savings of roughly 1,000 billion rupees, which is 1 trillion rupees. Now, on top of that, you have this 2 trillion rupees of savings from GST rationalization. I'm referring to the number at a holistic economy level. Again, on top of that, you have various state governments coming out with welfare measures. Now, those welfare measures may not uh, be targeted at people looking to buy cars, but that is obviously meant at the lower end of the spectrum. But again, all those things do matter at the consumer staples level in terms of demand for your packaged food, in terms of demand for clothes, so on and so forth. So, at a holistic level, all these things do matter in terms of consumption in a festive ahead of the festive season. And more importantly, there is a 8 pay commission which is expected to get implemented next year. So while that is still some 8-9 months away, historically we have seen that whenever there is a pay commission implementation, uh, passenger vehicle segment, especially the lower passenger vehicle or car segments, happen to be beneficiaries of that announcement or implementation. So again, another positive factor for consumption is expected by way of 8 pay commission over the next year or so. So all these things are coming together in synchronization, which has not been which is not what we have been seeing in the recent past. So those things coming together actually create a ripe environment for consumption boom. What has happened previously in FY09. So in the FI, in the Feb 08 budget, which was the FY09 budget, because of the global financial crisis, there was a sluggish demand for automobiles. Obviously, people were delaying their car purchases, which is understandable, right? When people you're reading news. Left, right, center that people are losing their jobs in US, they're losing their jobs in Indian IT hubs, so on and so forth. So obviously, at that point in time, there is a tendency to delay any discretionary spending. So as expected, automobile volumes had slipped during that period. Now, what the government did at that time is they reduced the excise duty. So at that point in time, there was no GST, there was excise duty, there were customs duty, so on and so forth. Now, excise duty was reduced by 4 percentage points. And even that 4 percentage cut in excise duty resulted in a significant rebound in auto sales. So you can see from the graph on the screen itself how FI8, FI9 were bad years in terms of volume growth, but then you had FI10, FI11 where the volume growth was phenomenal. So that's how an indirect tax cut actually can play a huge role in boosting consumption in the years to come. That's something what we expect again in the current environment because of the GST rate cut. Fiscally, that 2,000 billion rupees, if households are saving on 2,000 billion rupees, there could be an inference that, okay, the government is losing out on 2,000 billion rupees in terms of revenue, right? But the answer is no. The government is only losing out on roughly 500 billion rupees, which is 1/4 of the total household savings. Now, how is the math adding up? So that's what I'll try to address as simply as possible. So out of the 2,000 billion rupees saved, 500 or 480 is the impact from GST rate cut. Another 1,400 billion rupees is from the elimination of compensation cess, which was anyway going to be eliminated by March 26. That's the first thing. So it was anyway going to be eliminated. It has been eliminated just 5-6 months ahead of the uh, pre-decided date. So that is the first thing. Secondly, this compensation cess was not a revenue item for the government. That cess was basically used to repay the loan that the government had taken from the market to pay the state governments for any shortfall on account of GST implementation. So I'll repeat. So when GST was implemented, state governments were reluctant. There was pushback or opposition from the state governments that, okay, we don't want GST because we lose out on revenue. The central government at that time said told the state governments that, okay, we are promising you a 14% growth in your collections every year. If that is not met, we'll pay for that shortfall from the compensation cess that we'll charge on luxury and demerit goods, which we'll charge for 5 years. So from 17 to 22 is when the cess was supposed to be charged. What happened is during COVID, every equation, every math went for a toss. Shortfall increased, cess collections dipped. Government was not able to pay the state governments for the pre-committed amount. So what they did is they took a loan from the market. they paid the state government. The state governments were out of the equation. The loan stood on the books of the central government. Central government continued collecting that cess for another 3 years, which is still today. And that cess was only being used to pay that loan. Now that loan is almost paid off. And only in the next few months, by continuing cess on cigarette and tobacco products, that loan will be completely repaid, which means that that cess by itself was not a revenue item. It was just being used to repay the debt that the government had taken, and that debt is more or less paid off now. So elimination of that cess is not a revenue impact for the government. So net out of the 2000 billion rupees of household savings, only 1/4 of that comes from your happens to have an impact on the revenue side. So all these things put together, again, along with the strong signaling from the government that the benefits have to be passed on. You've seen the finance minister tell the industry that the industry has to pass on the benefits. The ministers are going to keep a close eye on the prices before the cut, after the cut, to avoid any malpractices. All this means that the government actually wants the tax cut benefits to reach the consumers, and that's actually a very important thing, because until the benefits actually end up reaching the consumers, there is no benefit on the consumption side. So all these things put together mean that this is actually a very good time for the consumption theme, and investors can actually look for consumption oriented thematic products if from the tactical side, obviously. And on our end, we have the HDFC Transportation and Logistics Fund and the HDFC Non-Cyclical Consumer Fund, which give you targeted exposure to these things, because most of the diversified funds may have 7-8% exposure to consumption, or maybe 10%, but they won't have a huge tilt towards consumption. So having on the tactical side, entering this particular theme at this point in time could help the investors in terms of their portfolio. So with this, I'm done with the GST part of the presentation. Akansha, do you want to take questions here, or should I touch base on the second aspect of the presentation, which deals with the upcoming NFO?
You can take that. I'll just let the audience know that if you guys have any questions, then आप उन्हें chat box में डाल सकते हैं. At the end of the webinar, he'll definitely take up the questions. So you can go with the presentation, Ameya. We can take the questions towards the end of the webinar. Hello, am I audible?
Akansha, are you there?
Yes, I'm there. I was saying you can go forward with the presentation. We'll take up the questions at the end of the webinar. I hope I'm audible. I would request audience to let me know if I'm audible enough. Meanwhile he's presenting, अगर आपके कोई भी questions है तो आप उन्हें chat box में डाल सकते हैं. हम towards the end of the webinar हम वो सारे questions ले लेंगे.
There are questions. I can take questions.
Ameya, you can move forward with the presentation. We'll take up the questions towards the end of the webinar. I hope I'm audible.
So give us a moment, please. I think we are trying to connect to Akansha. I can see a few questions. If not, I can take the questions in the next minute or so. So firstly, I think there are questions on how this can help reduce tax evasion and widen compliance significantly. So generally what we have seen is in the lower tax environment, when there is lower liability, the incentive to evade tax or underreport taxation is generally lower. So that helps in terms of compliance. When there is higher tax, the objective or uh, the temptation to evade tax is higher. With a lower tax rate and a simpler compliance, it's generally seen that compliance with the law is that much higher. Yeah, Kancha, I think I was just taking one of the questions in the chat box. If you can, if you want to moderate, you can moderate.
Yes, yes, sure. So another question we have is from Priyanka. She is asking, do you think GST 2.0 can help reduce tax evasion and widen compliance significantly compared to the earlier structure?
So that's the only question I've already taken. You can take the other
Acha,
questions.
okay, fine, fine, great. So Nikhil is asking, can GST 2.0 reforms help India attract more foreign portfolio investment compared to other emerging markets?
So this particular reform has actually been implemented purely from a domestic standpoint. I don't think the government was actually trying to look at it from a market standpoint. So unlike Make in India or other kind of reforms where the idea was to attract foreign investors or to help companies attract foreign investment, here the idea was purely to drive consumption. We are looking at an environment where on the export side in textile, gems, jewelry, we could face some challenges. So we need to offset that, right? So we are trying to rely on domestic economy or domestic consumption picking up to offset that impact, and that's exactly what the government is trying to do. In terms of FPI, foreign investment, this is a non-event from that standpoint.
Okay. Komal is asking, how do you see GST 2.0 impacting consumer prices in the short term versus long term?
As I said earlier, in the short term, with the government, the companies will have no option but to reduce the prices, because the government is keeping a close watch on the prices before and after the GST rate cut. So in the next 5-6 months, there has to be a passing on of benefits to consumers. Otherwise, the companies could be at the wrong end in terms of the government backlash. But if you're looking at it from a long-term perspective, say car manufacturers today, Maruti or any other car manufacturer may reduce the car prices by 10% today, and it's quite evident, right? They'll have to reduce because you have the prices today and you'll have the prices after the implementation. You can clearly compare the prices between the 2 points. A year down the line, they may gradually increase the prices even with the current GST rates, because then there is a possibility that they can pin it down on increased raw material prices or increased cost of manufacturing. So then in that case, the government cannot actually question them. So a year down the line, if there is an uptick in demand, the prices need not be lower to push demand. Then as a manufacturer, I would try to get in maximum profits by increasing my prices. So year down the line, the prices could increase. Immediate short term, the prices will reduce.
Okay, okay. So next question we have is from Rohit. He's asking, given global headlines like US tariffs and geopolitical uncertainty, how much can GST 2.0 actually shield into India's growth?
So in terms of impact, as I said, it could have half a percentage impact in terms of the GDP. Half a percentage is not a huge number, but it's still a noteworthy number, because if you look at the tariff related impact from the US thing, India's exports to US is roughly 2% of the GDP. Now, because of tariff, obviously you won't see that going to zero, but there could be some impact, right? So that broader estimates for that happens to be 0.5 to 0.7% of GDP impact from that US related thing. So more or less the consumption push is offsetting that impact from US related trade dispute, so to speak. So yes, it is more or less something which will offset that impact rather than it having a earth-shattering impact on the GDP.
Okay, okay. Next question we have is from Udesh. He's asking, how should retail investors position their portfolios to capture the GST-led consumption view?
Yes, so consumption obviously, so any thematic story needs a good entry point, needs a good exit point. So in terms of entry, Obviously, the best time to enter was probably a month back, but the second best time happens to be right now because you're still yet to see the demand coming in, right? Yeah, right now what has happened is we are expecting demand to increase. Once you actually start seeing these in the quarterly results of car companies or consumer staple companies, the stocks will re-rate even further. So then, obviously, it would become too late to enter these particular themes. So if you're planning to enter the consumption theme, this is probably a good time to enter that. We as a fund house are offering two products on this front. So one is the transportation and logistics fund, which is more or less an auto fund, and the second is the non-cyclical consumer fund. So that will be consumption X of autos, which will include your consumer staple. It will also include your hotels, so on and so forth. So these two funds we are offering to the investors, to retail investors on the consumption side.
Okay. So Praveen is asking, do you expect auto sector to see a re-rating because of lower GST on entry-level cars and two-wheelers?
Yes, we are already seeing something like that happening, and we see that happening further as well because we have seen not so great volume increase over the past couple of years, and especially in certain segments. So that can change in the coming period, and with increase in volumes, obviously you'll see some P re-rating or price re-rating for these stocks, and that as things stand, this happens to be one of the few sectors where the P ratio, the price to earnings ratio is lower than the long term average or the 10-year average, or close to the long term average, 10-year average. Most of the other sectors happen to have relatively expensive valuation. So it's already at fair valuation or relatively lower valuation, and then coupled with good volume growth in the coming quarters, you can expect some re rating in these stocks.
Okay, great. I guess we are done with the questions. अगर आपके कुछ और भी questions है तो आप उन्हें chat box में डाल सकते हैं. We are still taking up the questions. We'll wait for a few minutes. If we get any more questions, then we can take up that too, or else. अगर आपके कोई भी questions है तो आप उन्हें chat box में डाल सकते हैं. I guess we are done with the questions. So thank you, Mr. Ameya, for providing our audience with such a valuable session. I hope the new GST reform and changes are very much clear to the to audience and to everyone. ऐसे ही और webinars के लिए आप Indiabulls Securities के Instagram, Twitter, Facebook और YouTube channel को follow कर सकते हैं. Thank you everyone for joining today's webinar. Thank you, Mr. Ameya, for giving us time.
Thank you.
Thank you. Have a great day ahead, everyone. Thank you for joining this.